Hey guys, welcome back. So today, which is March 14, 2023. Today's video is not gonna be that long. I just want to do some market review based on yesterday's price action and what to be expecting for the rest of the week. So there's a particular topic I want to teach. I have two big topics I want to teach, but I think I'm waiting for time at this moment. There is what called the NWOG, which is in ICT 223 model. So I'm going to introduce you to it, and probably if you want to learn more about it, then you can go search for it on the particular video on, and you can go search for it on ICT's teaching, one of his 223 mentorship. It's there. So I'm going to introduce you to the model and tell you one or two things about it, and if you feel you don't really understand it that much, then you can go about learning it from ICT. So sorry. So that's the NWG, which simply means the new week opening gap, and the NDOG, which simply means the new day opening gap. Trust me, those two things are absolute gem in the market in price action when it comes to price action. So you need to understand that. So that's the topic I'm waiting for to introduce to you, and also waiting for weekly power of three. I know I thought about the power of three, but I want to teach you the weekly AMD, accumulation, manipulation, and distribution. So that's another topic I'm waiting for to introduce to you and show you how it happens. So, but before then, I want you to look at another transaction. And now people be asking what's their bias, they're confused. Are they selling or are they buying? Okay, yesterday we had a really confusing price action. At first we saw a heavy sell before boom, everything was changed. That was March 2023 at the time of this recording, which is March 14. So remember what I talked about in the weak zone liquidity. So if you have not watched that video on weak zones liquidity, please refer back to that video. Just search for it in the channel, you see it. Weak zones liquidity. You can see what happened here now. I don't want to maybe after it has happened then I'll say okay, I called it. I don't do that. I absolutely don't want to do that. I want to show you here. So before it happens, okay, yes, he said it's gonna happen. So you remember what I said about weak zones liquidity? They always occur in the chart, and it's a sign of a result. This is a particular particular kind of bias for me. You can just simply call it liquidity sweep of previous daily low or whatever you want to call it, but I call it weak zones liquidity. If you don't understand what I mean by weak zones liquidity, just refer back to that video, weak zone liquidity, or let me take it to it. Alright, so in that video, the weak zone liquidity, I explained what this does to the chart. When it happens, what you're expected to see, and all of that. See, I'm not just taking all these things and compact it together, like teach you all at once. I'm teaching them like one by one, step by step. It's for you to apply all these things on your notes, then see how you can form a strategy around it, because that's exactly what I did when I was learning. I'm still learning from ICT though, so it's like my never-ending mentor, because it just keeps bringing on gems and gems and gems every day. I'm just referring you to things I see on the chart. Now I understand them on my own models. I'm not responsible for anyone pressing any button. This channel is just for educational purpose. So I made a note out of his teaching, watching thousands and thousands of watching thousands of hours in his video, spending thousands of hours in this video, because this video can be so long. Those of you who are familiar with it can agree to that. So I got my own module learning from him and studying the charts. He did not just give me an holy grail. So you think you get an holy grail from this channel? That's absolutely wrong. Some people who just get everything here, then go to their chart and start doing it. Well, I'll say that you should be practicing, not doing it live. You don't learn here and immediately go to your chart and start doing it live. That's absolutely wrong. Practice it like back test. Study them. What I'm doing here, is it the same thing as seen on your chart or on your pair? And please be aware, I've been so focused on using as 100 instruments. Please be aware of that. So if you are trading whatever crypto pair or whatever, I don't know. So you relate to these things I'm doing here and you go study them on your personal pair or whichever you want. So this week zone liquidity happening on Nasdaq. Now, I don't know if it's happening on GBP USD. I don't know if it's happening on Euro USD, but I know certainly that it is happening on Nasdaq. Now, if you've not watched the video, week zone liquidity, let's go to the channel. Okay, so you have the channel. Yes, I'm trading up. I've dropped a couple of or multiple powerful videos, so you can see it here. 1 month ago, week zone liquidity. You can see my week zone liquidity. You can see that structure on the thumbnail is exactly like what is showing us there. Price, the current price sweeping previous daily price. So you go to refer to the episode 9 of the week zone liquidity, and you understand exactly what I'm trying to do. But I'm not going to explain too deep. That video will do that. Okay, so when we see this, we are expecting a buy because first we have multiple confluence that we are expecting. We're supposed to expect a buy, and one thing you should know that ICT doesn't deal with fresh zones only. ICT cuts through candles. As you can see, you probably be saying, "Oh, this imbalance is invalidated," because that's what you'll be telling yourself. This is not supply and demand that deal with fresh zones as they teach you. This is clean price action. This imbalance is not invalidated. This also is not invalidated. Price refer to these candles and they are called inverse fair value gap. That's what I still call them. Inverse fair value gap. But I don't want to complicate the names a lot. So I just write it at the video. So you might be confusing. Oh, price have refilled that and I'm still drawing that. Yes, it's called inverse fair value gap. Price will respect that, so it cannot be ignored. So we have multiple lows here. 1, 2, 3, which price took out slightly last week, Friday, and drop another buy side liquidity. We had price this morning sweeping that buy side liquidity before rallying higher. Now, once this occurs, this is telling me that price is ready to buy. There's nothing you tell me, there's nobody, there's no saint that come and be telling me to sell price at this moment, and I'll sell. I'm expecting price to buy first to where? Okay, like I said, I want to teach about the NWOG and the NDOG, right? Let's go to the Harley chart. Okay, so this is the NWOG of last week. New week opening gap. That's the new week opening gap of last week, and this is the new week opening gap of this week. So mostly these things act as support and resistance, but you can see clearly that that is not support and resistance, as you may know, but they act as support and resistance. Once price reach to it, it rejects. Once price break to it, it will test on it. You can see clearly what it did here. So I'm going to teach about that once I see engagement on this video. I'll teach about that. So if you want to learn that, so you can see price sweeping this previous daily low, dropping into that FVG. And on the previous video, I think you should understand this, the last video I dropped, which is insight on liquidities. Insight on liquidities. I explained this very well. What happened here. Remember what I told you what price does when it's taking out liquidities. It should take with imbalance for you to know if it's ready to pull forward. So this particular thing is not what I learned from somebody. It's actually what I learned from studying alone. And when you are dealing with those things, You should not consider looking at one particular time frame, because once when this the previous daily low was broken yesterday, if you were looking at 5 minute time frame, you think, oh, price is ready to pull forward, because it did broke. You can see it did broke with imbalance. It did a 15 minute, it did broke with imbalance. Let's go to that 5 minute and you understand what I'm talking about. Okay, so this is a 5 minute. You can see what I'm trying to say. It did broke with imbalance momentum, and at this point, if you watch that video, you say, okay, this equal lows. So let price trade back to this FVG, so you can start continuing yourself. So looking at one particular time frame, just trading without higher time frame narrative is a big sin to the market. Yes, I call it a sin because you get misled. So when I was looking at one hour time frame, I want to see what 1 hour time frame will do. Is breaking that low, is it going to break further with momentum? If it had broken further with momentum, then I'll say yes, that is when we are likely to pull forward and pull downward to this other sell side liquidity here. But that was a daily FVG. And you know what daily FVG does? Daily FVG is likely a reversal for price. Most especially an old FVG, not just new ones forming. If price is referring back to a very old FVG, there's 85% chance that price will reverse from the FVG. So I knew I got all the confluence I was looking for. First confluence was that price swept previous daily low with no momentum. If you watch insight on liquidities, you understand. No momentum. This is probably the no FVGA for price to retrace to and keep pulling further. So I saw this and I was like, okay, fine, price is ready to buy. But I did not get any opportunity to buy yesterday. Why? Let's look at the 1 minute charts. Okay, so yesterday, when price swept this at our New York open, I hated the price action, so I did not want to engage in anything on the PM. So this was 9:30 open New York. And for those of you in Nigeria or wherever in the world, you might probably experience a slight change in time. You can see that New York is no more -5 for now. It is -4. Yeah, it is. I don't know why it's not updated yet. Here is -5, but at the bottom here is -4. So the difference between our time with them have changed, probably moved backward by 1 hour. So you should know that started yesterday, daylight saving. So we had the 9:30 open, the price rallied, price dropped into an imbalance. Before I didn't I know wanted to engage on this imbalance. I want to see price taking low, dropping into an imbalance, giving me the simple entry model before entering. How would I do? I don't place limit order on imbalances. I want to see the simple entry model first. So I had this perfect OTE. I wanted price to be traced back to it so I can place my long order, and nothing like that occurred. So we just had price continue rallying, and that was how yesterday ended. I did not engage on anything at the PM because the PM was too choppy, as you can see that. So what I'm trying to say here is that yesterday we had this telling us that price is ready to pull back. And if you watch this video, Insight on Liquidities, where I explained this vividly, where is price likely to pull back to? Where is it going to? Okay, so first, this NWG, this new week opening gap, and these other new week opening gaps, all these tend to act like magnets. It tends to act like magnets to price. The magnet price, the core price to them. Okay, so I'm looking at, since Asian session had no sell side liquidity. Yeah, you argue that with me. It was just bunch of consolidation. I'm not seeing any liquidity on the Asian session for me to trade with on the London. This is a low, but the low did not break any structure, so um it's not a high probability setup for me. What I want to see is price trade back to this NWD probably, or to this imbalance. But until New York, I'm not engaging on any price action for now. But the thing is, the idea here is we are buying, right? That's my own strong bias. We are buying. I've gotten all this confluence. One from the daily, weak zone liquidity dropping into an average. Hourly, we broke this equal lows with what? With no momentum. That's telling us that price is very likely to pull back forward. So we are likely to pull back to this high. This is the high on the daily time frame. I see this high. We are likely to pull back to here, but I'm not a swing trader. So where will my eyes first be on? This buy side liquidity, right? This multiple highs. You see multiple highs there, 1, 2, 3. That's where that's where I'm looking at for all my targets of any buy I'm taking today. If we take that out, we have this other high. If we take this out, we have this other high. So you see how it works. And also the weekly power of 3, I've not taught you that yet. Weekly power of 3, that's another confluence of another bias I'm getting, which is also telling me that the we are buying. We're supposed to be buying. So this is just the market review of yesterday and what I'm expecting to see this week. Not what I'm expecting to see for the rest of the month, please. What I'm expecting to see this week is buy. If we can possibly take out this high before Friday, then you just wait for this insight on liquidities. This what I thought on the insight of liquidities. Just wait for that particular thing to see what's going to occur there. I'm not predicting, I'm just saying if we should go to that level, I want to wait and see what's happening there before I react. But for now, my bias is going to this level. So I just want to be looking for buy opportunities. I don't want to be stupid selling in this market. So I want to be very cautious of my trades this week. So this week might be so confusing for the inexperienced. But once you have your own strategy, you have your own setup, you have your own model at a particular given time. Trust me, you won't struggle in this market. You won't struggle. Trust me. I have what I want to see. Once you just get that confluence, once you just get that bias. Some people, most trades I see on Twitter, most people make their videos telling you that you don't need bias for this. You just need to go to that 9:30 open, wait for a fake move, and then boom. That's nonsense. If you wait for the fake move on 9:30, sometimes the fake move will fake you. Yes, you see when prices the bias, everything bias is bullish, and price fakes to the upside first, taking liquidity and fakes to the downside before actually moving out, before actually moving up. And you think that the actual fake move was what to the upside, and you want to draw your imbalance, wait for OT, draw your imbalance to start selling, but the price takes you out. So I see that as absolutely nonsense. If you don't understand your bias in the market, bias helps. It fucking helps. If you don't understand where price is likely to run into, what are you doing at the lower time frame? Most guys just want to just want to go to the 15 minutes. They draw their market structure, then they see a particular POI, or they come to the owner, as I want to say, oh, this break of structure, oh, this is my supply. They draw, they wait for price to get into there, then they go to the lower time frame and wait for coach, or the 15 minute wait for coach, change your character, or whatever they call it. That is trading with no narrative. You don't have any narrative in the market, you're just looking for any break of structure to come and place your coach and start trading. That's not how the chart works. Okay, so if you are looking at the daily chart first, okay, mostly I look at the weekly chart. Okay, I look at the weekly chart, and on the weekly we had, I know I talk about this until next class, but let me just say it. On the weekly we have imbalance to the downside, we have imbalance to the upside, and you can see price have filled that weekly imbalance. Forgive me for this writing. Price have filled that weekly imbalance. You can see from this week to this other week, there's an imbalance there. Price have filled that, so it's likely going to take out the previous week high. Why do I say that? Well, I don't know why I said that, but that's exactly what I'm looking at. This imbalance on higher time frames, tends to act as a point where price retraces. A very strong level of reversal is imbalance. So once price drops into that, price is likely to take out the previous week high. Yes, it's possible. You go to the daily time frame, price also dropped into an inverse imbalance, inverse FVG, taking out sell side liquidity, and also dropping the weak zone liquidity. See different confluence. And also on the 1 hour time frame, price took this out with no impulse, no momentum, another confluence. So whatever I'm looking at here, I don't want to wait for that specific time, then wait for power of 3 on the New York to exactly buy. So that's it, guys. That's the market review for March 14 and ahead of the week. So until next time, be safe.